in the Philippines today, this is one of the most interesting places around for microinsurance. What we see is a confluence of several different factors that come together to make microinsurance potentially successful. There's a foundation here that's stronger than in most anywhere else. You've got the government that's very open. Historically, you've had mutual benefit associations, which you don't see in many other countries. Now you have the new framework and the new strategy for microinsurance. You've got commercial insurers that are very interested in this market, mutual benefit associations that have been in this market. Both of them want to develop better products, expand their markets much further, and work with delivery channels to be able to do that. And what you've got is a very large population with some significant demand. Various estimates from 20 to 40 million people that could be insured by microinsurance. And this is a tremendous potential market. And what you've got now is all these pieces coming together to make it a good foundation for growth. And in many places, what you see is one piece or the other piece or maybe two pieces, but never the whole picture. And so here you have this whole picture that will help providers of microinsurance to develop better products, products that really provide value to the low-income market, and offer those on a massive scale. And so I think there's huge potential here. And then compounding all this is the fact that you've got such a strong mobile banking, cell phone technology available to be able to onlay some of the microinsurance activities on to make microinsurance more efficient. And so really, you've got all the pieces here to make microinsurance really explode into good products for low-income people. What's needed to advance microinsurance, and when we talk about advance, I don't mean another 10,000 clients, I mean millions of clients. What's needed to advance now is to take a look at this strategy and to actually implement some of those pieces, the pieces like financial literacy. How do we get the market to understand what insurance is, and not just understand it, but appreciate the value of microinsurance in their lives? If we can get them to appreciate the value of microinsurance, then they're more likely to purchase good products. They're more likely to understand what good products are, and they're more likely to purchase them. And if what we're doing on the insurer side and through the regulations also is to create better products that have more value, then what we've done is created an opportunity to mix this demand with supply that meets the demand. Not supply of products that the market doesn't demand, but products that meet the demand for the market. And this is what's going to, one of the things that's going to really help move the market. We need better delivery channels. We need to think about how we're going to get those products out there. And we need to move beyond microfinance institutions. We need what we call passive delivery channels to be able to start getting products out there in ways that people aren't just belonging to microfinance groups, but that they may purchase insurance through vendors or through other mechanisms. There's lots and lots of potentials here. We need to spread out. We need to have a broader vision about how we can offer microinsurance. There's a lot of microinsurance happening in a number of countries. There's some mediocre growth in some, but there's really some extensive growth going in others. But really what you have here in the Philippines is this combination of factors that I think creates maybe more potential than most other places. You have a lot of insurance, microinsurance in places like India because of regulation. You have microinsurance in places like Colombia because the commercial sector has come together and decided that microinsurance is a good business. There's microinsurance in many other places, of course. But having this foundation of potential here in the Philippines, I think the Philippines has the chance to become the microinsurance capital of Asia. The regulatory framework sets a foundation for microinsurance. It defines microinsurance and what microinsurance is in this country. And that in itself will help insurers to understand what is microinsurance, what is not, how do we work within this. The strategy helps then to implement things both with the law and with the financial literacy and with consumer protection that will help to create a strong foundation. The prime movers are different in many countries. In some countries, it's regulation that pushes insurers to go into this market. In other countries, there's regulation that facilitates the opening of the markets. India, for example, pushes. Brazil has opened up and offered tax concessions for microinsurance, for example. These kinds of things facilitate entry into the market. And so these are important movers. In other countries, it's been the commercial sector, really, that recognizes that this can be a market. So you've got a number of different movers in a number of different places. Which are more effective? They all have benefits and issues. Okay? What you have here, because you've got this new framework and the strategy to go along with it, is you have a facilitative structure that should have a very strong impact in helping insurers, in the broad sense, insurers and MBAs and those taking insurance risk, to be able to provide better products, to do that in an easier, more appropriate way, looking at, for example, agent legislation and how agents, or who can be agents for microinsurance, as well as how quickly claims will have to be paid, as well as how the policy documents are framed. If we talk about insurance, microinsurance is something that fundamentally has to be very simple. You look at the strategy and over again in the strategy and the framework, it defines microinsurance as something that has to be simple. And then the strategy creates the structures with which these policies can be simple. So I think the combination of these, as well as the open and interested and actively aggressive market looking to microinsurance as a potential market, both for business reasons and for corporate social responsibility reasons, is a combination. Certainly profitability has to be first. You can't have corporate social responsibility without profitability. But the two combined will help with this foundation of strategy and framework to really help to move microinsurance. So I would expect some very, very significant growth over the next couple of years in microinsurance.